What is going on, everyone? Welcome back to another video, another day, another dollar with your boy. We're gonna be breaking down our futures contract. We're gonna break everything down from the top down. It's been a little bit since we last spoke. I believe it's been about I want to say a week exactly since we last spoke. Um, this week was really rough week. The last several days have been kind of tough to read as far as the market goes. So we're going to go over everything that has happened in the last week. Look at our monthly, weekly, and daily chart. Look at our 30-minute time frames. Mark some destinations, and then kind of just discuss my trading as is. It has not been well, to say the least, over the last several days. I've done good, or I've had some good trades, but there have definitely been some trades where it's I did not manage my risk well, and that's just simply put, I did not manage risk well. And that's kind of the theme of this story of my trading career so far. Is I'm not managing my risk well. If I want to get serious about doing any of this trading, I got to get it through my head. I have to manage risk. I have to take the small losses, and I need to be present at all times when I'm in a trade, and I'll explain more about that here in a minute. So if you guys want to stick around for any and all of that, hang out. This video will probably be 15 20 minutes long per usual, as it is just me rambling and looking through charts. So if you enjoy that type of stuff, stick around. If not, then see you later. And we're going to go ahead and get right into it. Right now we're looking at our monthly time frame. We've been one time framing up on the monthly for the last several months. One time framing up just means we're making higher highs and higher lows. 1, 2, 3, 4, 5 so far. Now, so far this month, 5 days into the month, we have not taken out last month's high. In order for this trend to continue to be strong on the monthly time frame, we need to take out last month's high of 53.2275. If we do not take out last month's high, we may end up with, because of last month's range being so large, 259 points, we may just chop around inside of last month's range, and which will result in a inside month. And then maybe come May, we'll look to take out this month's low, wherever that may be, if we do not take out the high here and set new highs in this month, or during this month, or the next. But this could potentially be a sign of things kind of slowing to the upside. And we'll see more of that. We'll read more into that when we look at the daily time frame and the weekly time frame, because things have changed drastically on those, especially in SPY. SPY, for the first time in 20 weeks, I believe. They've been one time framing up for the last several weeks in SPY. They finally come back into a balance, whereas ES has come back into a balance. The futures contract has come into balance a few times, but only for like a week or so, and then it breaks out and keeps on moving, whereas SPY has not taken out a previous week's low for several weeks. Let's look at the SPY real quick. I just want to show you guys what I'm talking about here. So this is SPY weekly that we're looking at. And if we look, since breaking out of this little bit of balance here that we were in, we have not taken out a single time frame's low or single previous week's low for the last several weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 weeks of just straight movement to the upside before finally taking out a previous week's low. And then if you really want to look at this whole trend since coming out of this low down here, 1, 2, 3, 4, 5, 6, 7, 8, balance, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So that's why I say 20. It's been a pretty big run to the upside since these lows. Since the lows down here, and since we started moving up, that has been a, it's been a, how much? A nice 26% move to the upside. So really strong there for SPY. Whereas ES, whenever we look at the weekly, it's come out, it's taken a previous week's low, previous time frames low out, and come into a balance for about a week or so. So SPY and ES now back in the tandem here, where we are now in a nice 3-week balance. So the monthly's one time framing up, meaning we're setting higher highs, higher lows, And our weekly is now in a nice little balance here. As we took out last week's low, which was 52.63, we needed to hold that if we were buyers, right? That was once our daily balance low as well. We took that out, now down on the daily. We'll see that here shortly. But right now we are in a balance in the weekly, which just means the trend to the upside has slowed for the time being. All right. Now, come next week, if we take out this week's low, 51.95.25. Oh, actually, excuse me. We took out this weekly low by a point. Excuse me, 94.25. I need to correct that. That's going to be our weekly balance low. If we take out 94.25 on the downside, the weekly will come out of balance to the downside, meaning the trend will now begin to move lower. And we could really begin to see some type of sell pressure step into this market and maybe pull us back to where, we've tested around previous levels above the 5,000 level, maybe get back to the 5,100 level. I believe the 50-day moving average is right around that level. But if we do take out this balance low, things could really start to pull back. Now, I'm not saying it's going to pull back drastically in the sense of like we're going to go all the way back below 5,000, see 4,600, fill this weekly gap down here. I'm not saying that. What I'm saying is we could see a nice healthy pullback from the highs, which typically would be about 5%. All right, a healthy pullback tends to be about 5%. So a 5% pullback would put us right around that 50-60 level, right? 50-60 level would be kind of a target on the downside, or these two weekly lows down here where we had just come back into a balance, had a reversal, and got to moving to the upside. So potentially targeting this 50-63 level on the downside, right? If we do come out of this weekly balance to the downside. Volume has increased. This week's volume, 6,158,156. All right, that's the heaviest volume we've seen in a while. Heaviest volume we've seen since this big reversal here. This volume was 7 million, 7.8 million. Next would be 6.1 million. So it's been a while since we've seen this type of pullback in aggression to the downside with volume. Okay, so volume is definitely a part of the equation here. So chop it around inside of this until we come out of it on the downside. Now let's look at the daily. Here's the daily within that balance area for the weekly, right? It's just a channel, okay? So as far as weekly, since we are in a balance in the weekly, what we would need to see is on our daily, a hold of the balance low here. So meaning we test low here, we test the lows, hold, and then we would test the other side of the range, meaning the daily would come back into a balance at some point in time. Another thing to note is the daily, since having an outside day down, coming out of balance to the downside, finally got some volume, right? Volume has increased on the daily. We were in a nice little balance area here. We broke out of it, kind of came back into balance, right? By taking out, what day was that? Tuesday? Monday, Tuesday? Or was that Thursday? Monday, Tuesday, Wednesday, Thursday. Right. Okay, Wednesday, right? After gapping lower, pushing to the downside, taking out balance low on Tuesday, Wednesday we came back into balance. Yesterday, we had an outside day up, pushed up to the upside, filled the gap. We actually gapped above a gap, came back down, and now we are one time framing down once again. All right. This 52.63 level is going to be my line in the sand because we had a lot of volume, a lot of choppiness in this area kind of consolidate for quite some time. There's a lot of volume, a lot of price discovery up here. We did not really find acceptance in this range, in my opinion. Once we came back into it, look at how aggressive we rejected it. Okay. Then, not only then, 52.63 was a must hold. That was the previous week's low. Okay. That was the previous week's low. That's what brought us into a balance on the weekly once we took out that low. So 52.63 is going to be my line in the sand. If we hold above 52.63 and take out today's high come Monday, we will be back to balance on the daily, and we'll initially use a 3-day balance depending on how much we push up. If we get this high up here miraculously after having a nasty trend day down, if we miraculously push up and get this all-time high, it will still be balanced. Okay. Downside. Here's our downside risk, right? If you're someone who is long, downside risk is going to be your 50-day moving average down here at 51.15. Okay. Where I said I was thinking the market would pull back to was this area of previous balance, where we were previously chopping around in for quite some time. We had these daily lows here that never broke. These daily lows right here held like, they held at the front of the line. These buyers right in this area would be kind of the next downside target on the extreme side. Now, if you're looking at where we broke out of balance from, broke out of balance, came back into balance, broke out of balance again, right around that 51.20 level, 51.15, that 50-day moving average would become a downside target most certainly, and you would like to see that hold. If not, then you would continue to get more downside extension into that 50-60 level, and then that would be about a 5% pullback from the highs, right? That would be about a 5% pullback from the highs, and to fill that gap would be even more of a 6% pullback, which isn't a terrible correction in this market, right? So that's going to be a must-hold area for me. Between 51 and 50.63, that's going to be a must-hold area for the daily. Hopefully it all makes sense. The daily, once again, in one time framing down mode, weekly in a balance. Just to reiterate, weekly in a balance. This is what the daily looks like, chopping around in a balance. So balance rules, right? We get near balance low, hold, rotate up to the other side of the range, and test that side of the range. If we don't break through it, guess what? We rotate back down to the other side of the range until we take out a balance high or a balance low, right? That's what you're going to look for. Weekly, balance. Daily, down. Monthly is one time framing up, meaning the trend is still good, still healthy in the monthly. But we would be, if you're somebody who is a short seller, you would be targeting last month's low of 50.63. That's also why I have that target in my head. So 50.63, 5100, 50.63 in that range is going to be a must hold for the buyers if they want to continue to push up in the monthly moving forward. All right. Now let's go ahead and look at our 30-minute time frame. I know that was a lot. Hopefully you guys followed along. Hopefully that made sense. If not, then I'm sorry. We're going to look at our 30-minute time frame. And this has been rather difficult, okay? All this chop that we had here, I actually did relatively okay in, okay? Traded well, managed risk, made decent money. This shit right here is what I struggled with, all right? I didn't really trade on Wednesday, right? I didn't really trade on Wednesday because we had gapped down on Tuesday, right? We had broken out of balance on the downside on Tuesday. Wednesday, we opened up inside of the previous day's range, and then we just grind higher, attempt to go trend, take back the gap, missed filling it, right? So I did actually get involved a few times. I got involved on a couple of shorts, but didn't make anything really. I made a couple points on the day and then just got out of the market. And then we gap higher on Thursday, consolidate a little while. I did not trade. when I did decide to take a trade was when we had this massive liquidation to the downside. Okay. We got near the previous day's point of control, which was right around this 52.77 level. I got long thinking, okay, maybe this is just, a nice little liquidation and we'll rotate back up here and create a wider point of control, or at least not hold a trend day down, especially since we had just come back into balance and then took that balance out to the upside. We had higher value, right? There was a gap to the upside, higher value, gap. They got in the overnight high. So with all that, I was like, all right, yeah, I'm going to get long, rotate back in. Maybe this is just a fake out. We've seen that before, right? We've seen several times where we've come down, made lows, and then look at this, like this move here, right? You weren't thinking at the lows here that you were going to take out the other side of the initial balance, right? 52.94, the low was 52.70. You came up, and guess what? You spiked higher on that day to 53.10, closing at the highs, right? We've seen shit like that happen. Same thing here. Fed day went down, made lows, and then boom, right? We've seen stuff like that happen, but you're not expecting it. Same thing here. We're not expecting it to hold trend. We're looking to fade the extreme, and I thought I was doing okay by waiting until it got to that area. Now, where I got in trouble is as it pushed lower, I added to the position. It continued to push lower. I wasn't paying attention to the volume, and I got stopped out for a nasty loss. Gave back everything on one account that I've worked for over the last 4 months, and then it continues to trend down, taking out all the downside destinations that we had, setting a new low, which I need to update here, down here at the lows of 51.94. Then today, we open up in the lower distribution, right? We open just where the single prints start from the previous day, right? They started right here at 52.11. They get filled at 52.22. All right. I'd gotten short in the overnight session around 52.11, right? Thinking if the sellers are, real, and if this market is going to one time frame down, we should come out and take out the day's low and maybe get this POC down here on the downside. I was wrong. Got stopped out once the single prints filled in the RTH session. And then guess what? I attempted another short. Where did I attempt a short? Well, I attempted a short on this push up here, right? I was trying to fade. Trying to fade against the previous time frames high, right? We had had a massive trend day down, right? We had massive sets of single prints. So for those of you that don't know what single prints are, it's just where the one time frame of the day, right, created basically an intraday gap. So we pushed lower, not expecting us to take it back that easily, right? That just goes to show like strength on the downside. And because they are such large sets, you weren't expecting them to fill. Well, when we pushed up here, right, we never took out A's low. We took out the initial balance high. We got the overnight high. So things were in buyer's favor initially, right? And we're not expecting us to take this back, right? So my idea was, okay, let's get short. D couldn't take out C's high. So I was like, let's get short to fill the set of single prints. I was thinking the trend day would not hold, right? Because we had this massive trend day down that held, the likelihood of us holding a trend day to the upside and taking all of this back is unlikely, right? So my target was on the downside 52.31.25. That's where I had my bid. I was short 52.45. It came in, missed my bid. There was only a few contracts that were bought down there, or sold rather, because right, I'm short, I'm trying to buy. There were no sellers wanting to push it lower. So my bid never got hit, and it came back up, and I was not present. This is where being present and managing my risk a little bit better. I was not present I actually came in, seen that my bid had been missed. I was still in the profit, right? I still had profit on the table, but I was not satisfied. And I was like, they got to come back down. There's no way, right? They fill this set of single prints. Maybe that's all they want to do. They'll roll back over. It maybe take out the initial balance low and get to moving to the downside. Clearly, I was wrong. It continued to grind up higher, got back to where I was short, pushed above where I was short, and at that moment, I should have stopped out for a small loss. Instead, it popped up higher. I decided to add to my position. I added, and I added, and I added, and then I eventually got stopped out, giving back on another account everything that I've earned for the last 3 months. So that's what I mean by managing my risk. I'm not managing my risk. I'm adding risk, and I did not get out of the trade when I should have. Right? I gotta quit. Do well, right? I'll do well for 3 months, and then in one trade, I'll give it all back, and that's what I gotta stop doing. Um, I I don't know when it'll break through my head, but at some point it will, and I'll stop doing stupid shit like that, adding to a position that I should have gotten out of, seeing that the strength was to the buy side, right? And then look, eventually, this market came back in, right? It came back into 52.37. The trend day did not hold. It was just short covering to the upside, momentum buying, and in reality, all they did was pack in volume where we kind of just liquidated through these areas here. So just kind of short-term emotional traders um, cause this big move up and cause me to have a pretty nasty. No, they didn't cause it. I caused myself to have a pretty nasty loss on the week, on the month. It's going to be a tough one to recover from. But I'm going to do better. I got to do better. I've said it in the past. But one day it will come true. I just got to keep on grinding, keep on pushing forward. Have the strong mental fortitude to do such. I know I'm resilient. I know I can do it. I'm going to do it. So hopefully you guys will stick around to watch that journey kind of happen from this type of trader that I am, which I know I'm better than, and becoming the one that takes the small loss on the day and maybe steps back and waits for the opportunity to come to him, right? Like right here on this push up, right? We push up, we're one time framing up, we stopped the one time framing up, had a reversal bar, couldn't take out the previous time frames high, we come back in, right? Still one time framing up, has been stopped, maybe because we were holding single prints. Single prints filled right here, 52, 48, 25. I see on this push up in the next time frame, we can't really get back towards the highs. I get short 60, right? Or I get short 55, and my target is going to be 48. Even that small little bit would have paid out well on the short side. Same thing here. Push up against the previous time frames high. We're one time framing down. We couldn't hold trend. We have a target on the downside. Point of control was being developed around 46. I get short 61, use 63.75 as my out. It comes back in to 52.37, but my target is 52.46. So I make good points on the downside there. And I'm not present a lot of times in these during these time frames because I'm usually at the gym, but those are great risk reward trades. That's what I should be looking for instead of I had the right trade idea. I just didn't get out of it, right? Unfortunately, my bid didn't get hit. It would have been a great profit had I taken that, right? It would have been like, I think it was like $1,100 if I would have gotten hit right there. But even on the push up, I still had like $500 on the table. I didn't take it. It came back up. I should have stopped out for break even or even a small loss once it pushed back up and I seen that strength. But instead, I got stubborn, and once even then, instead of adding, I should have stopped out, especially once we made the new high on the day. Because even then, it still would have been a much smaller loss on the day. Would have been about $600 loss on the day instead of giving back $2,200 on this push up and adding to the position. So with that being said, I know this was a lengthy video. I'm not even going to bother marking the charts for you guys. If you guys want to see that and you made it this far, leave a comment down below. But that's just it's just me rambling at this point, and this video is long enough. So with that being said, I'll catch you guys next week. Hopefully, I'll do better. You guys will do better. Anybody that is a newer trader, definitely stick around. There's more to come. Go check out kevinbacktrading.org. Check out Paul Asmar. Great mentor, great guide. Definitely helps keep you guys out, keep me out of trouble, keeps other guys out of trouble in the trading room. Great community. They helped me through today on the mental side, and if you're struggling, if you're a struggling trader, maybe you'll be they'll benefit you as well. So with all that being said, ladies and gentlemen, see you later.